on X. And today we are going to be talking about a couple of trades that I took. One missed opportunity actually later on in the session after I was already closed down. But that's where the discipline comes in. And sometimes it costs you. But overall, in the long run, I think the bigger picture is the more you are disciplined, the better off you'll be. And we're going to discuss that. So give me 1 sec. I'm going to fire up these charts. I hope you all had a wonderful day. I know we did. And let's rock and roll. So now that we're into the charts, let's take a look at our trades. Now, the first initial trade was a real easy one. We opened up above this level, our support level. And even though I said that we don't want to take it, and I've talked about this 1,000 times on this channel, there's a lot of trades that you don't necessarily want to take because, excuse me, it looks like it's going to fail, but there's still opportunity in it. There's still always going to be a first reactionary bounce. And that's exactly what we had. It was a first reactionary bounce. Market opens up, dips into the support level. We execute, it pops up, we pay ourselves. That's it. Very quick little trade. Now, remember, I'm trading alongside my live trading members. So a lot of the trades that I take on Tuesdays are going to be the size that they would be trading as a lesson trade. Remember, I run my live trading sessions very differently than most. A lot of people just want to like bang off trades and try and rack up as much P&L, where that doesn't teach those traders anything. It doesn't actually teach them how to handle situations. So what I do instead is I look for teachable trades where the members and the traders can actually learn something from it. And that's what we did. And that's what we did today. So locked in a really nice trade, small P&L because of the size, but overall fantastic trade. So now let's go over to the next trade. It was on Qs as well. Now on this here, when it bailed, and we were expecting this to wash out, like I was saying, and I'm not going to go into detail because that's a lesson unto itself. It had a lot to do with the end of day VWAP. A lot of people will use that as support, but it was almost like a fake support level. And the reason why the end of day VWAP is important is that is the average price at which the majority of people are in, or the average amount of person is in. That's the price point that they will use to protect the positions. So it will get protected. That's why it held. That's why it held pre-market. But there's a little note here. You want, like, for people to be buying this big green day yesterday, it should have been buying it somewhere in this area where there's actual support, somewhere right here at the previous day's lows, right there, okay, at about 517-ish. Well, instead, that end of day VWAP is much, much higher, and it was actually at a squeeze point. So through my analysis of this, it's not like it's people are going to be buying this to be protecting it. It's actually where shorts got squeezed. And when shorts get squeezed, they have to cover their positions by buying those shares back. Okay. So when that happens, it's kind of like fake buying pressure. There's no real support because they bailed on that position. Okay. So that's the short of it. There's a little more to it than that, but that was the analysis this morning as to why this was this support level. It's not going to hold. It's going to bail. And that's what it did. It did bail. So when it ripped back up on that volatility, we started averaging in and was really patient with it just in case we needed to manage higher. Now, it didn't do that, and it ended up selling off. There was one more ad in there. So worked the trade a couple of times. And again, very small position here. So no substantial P&L. There was a trade later, and this is where the discipline comes in. So my original trade plan on both SPY and Qs, what I really wanted was a pop into this level because we're super protected. And yesterday proved it didn't want to go any higher. In fact, it wants to come lower. Now, we got bought up at the end of the day, but that is false as well. And I can even explain that to you guys if you want, give you a little piece of bonus info. So as it comes ripping up, I'd already shut down screen share because we're only on for the first hour of the day because that's all we trade. And then as it comes ripping up, I'm like, oh, perfect opportunity. I'm actually going to get the trade that I wanted. So I had loaded in a bunch of contracts. I really wanted to hammer this one to the cross, so to speak. but didn't get my entry. My entry needed to be coming into right here at a minimum at this Green Day's previous close. Okay, so right in that area, there's a level of support right there, and then into pre-market highs. Then from there, I would have added into this level and risked off of yesterday's highs. It's about $1.30 worth of risk. It's right in that area. It's a beautiful trade, highly protected trade. So I was going to apply pressure. It would have been a monstrous trade, but didn't get it. And then, of course, as you guys know, for those that follow on this channel, I have a very busy morning. I own a very large piece of property here in Costa Rica that demands a lot of my attention throughout the day. So I was unable to take any type of a secondary trade or look for a late day opportunity, which would have been really nice. But this was the trade that I wanted. And it came within about 30, 40 cents of execution. But those 30 or 40 cents are going to add to my risk. I can't take it. I can't. It's part of my rule set. It's part of the rule set that's why you see the level of consistency that you do on this channel. A consistency that's unmatched. It's because I'm trading as an absolute professional, is as professional as I possibly can at all times, at all trades, at every entry, at every exit. I'm always striving for that professionalism. And when you do that, yes, you may miss out on opportunities that you would normally get rewarded for piss poor risk. Like, sure, I could have entered into this and it would have been a monstrous trade. This would have been probably $10,000, $15,000 on this first wash very easily. Now, am I heartbroken? No, absolutely not. Because I know if I lack that discipline and to show restraint when I need to be thinking about risk and risk only, because that's the only thing that we can control as traders. We cannot control anything else. It is only risk. And that's why this lesson is so important. I see far too many button clickers out there and not traders. Traders that calculate risk, think about risk, that have trade plans, that manage and work that plan. They don't get shook because of emotions in a trade. They're actually working a trade. They are traders. Very few people out there can call themselves traders. Most people are button clickers, and that's not a burn against people. That just shows a lack of understanding as to what this career actually entails. And it has to do with discipline, 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 discipline. You have to show restraint, even in the times where you don't want to. And that goes both ways. That goes from entering a trade to holding back in a trade to not executing a trade. There's a bunch of different angles. So I hope you guys learned something. I hope you guys enjoy these recaps. If you want to learn how to become a professional trader, legitimate professional trader, and work with a coach that can actually get you there, come to tricktrades.com. If not, and you want to continue joining in on my free content here on YouTube and X, perfect. That's why it's there. As long as it's just going to take you a little bit longer. That's all. But if you have all of the time in the world and you're not pressed for time to become financially free, perfect. Enjoy my free stuff. It's just going to take you longer to put it together, guys. That's all. Okay, folks. I hope you guys all enjoy this. I'll catch you tomorrow. Adios.